Got him. Welcome to TDY, where we grow more each day. For those that don't know me, my name is Winston, but you could call me Winnie. And one of the major questions that I ask myself every day, literally, is which one is the better investment, stocks or real estate? Because I'm kind of leaning in both directions here. And I get asked this question a lot as well by a lot of my friends, and I really never know what to tell them. So I decided to do the research this week. I decided to really sit down and do like a deep dive and help the average person figure out which one is the better investment, stocks or real estate. YouTube is kind of funny with its algorithms, so if you like the video, like the video. If you don't like the video, hit that dislike button twice just to make sure. Before I start though, I did just want to thank everybody that's been watching these videos, learning from it, coming back to ask like clarifying questions. When I first started, I knew this content wasn't going to be for everybody, and I was totally fine with it. But I'm just glad that there is a group of people out there that are willing to do more, to be more, that are trying to learn more so they could actualize success in their lives. For those group of people, I just want to dap y'all up, man. Y'all doing great. Like, keep it up. Congratulations ahead of time. Also, did want to say shout out to my boy Joe O and Top Dollar Records for this shirt. It's really fire. Like, I love supporting like black-owned businesses, and I love seeing the people around me just do well. So like, if you're into music, if you have any more merch, just comment down below or link some of your stuff, and hopefully it inspires other people to support as well. All right, so stocks versus real estate. Oh my goodness, this is one of them conversations that you have with your old heads. It's like Michael Jordan or LeBron, like that just leads to a heated debate. Some people say stocks are better, some people say real estate is better, but like, what is the real answer? Like, where should I put my money right now? Should I invest it in stocks or should I invest it in real estate? So to speed this up a little bit, I'm going to make a couple general assumptions here. I'm going to assume you know what the stock market is. I'm also going to assume you know what the real estate market is. I'm also going to assume that you're doing this because you want to make money and you want to improve your financial situation. But keep in mind that personal finance is personal, which means this goes on what you feel like, right? Like your personal temperament, your risk tolerance, your personal situation. So all of this information, take it, internalize it, learn from it, but then adjust it to how you live your life and how you envision your future as well. I'm really here just to present some facts to you and some information, and then I need you to take that and then do your individual research on it as well. Just because some handsome, black, young, rich young man on the internet talking to you don't mean you gotta listen to him, you know what I'm saying? So definitely do your work as well. What's up, baby? So one of the characteristics about stocks that people like is how liquid it is, which means you could literally cash out your money at any point. So let's say you bought a stock that was worth $100 yesterday, and today it's worth $150. You could just sell it for $150 and then boom, you made a $50 profit. This is what a lot of people kind of did with like Tesla. You're dumb if you did it, but some people did it. This is what day traders do all the time. They buy stocks that they think are going to increase. They sell ones that they think are going to lose money. With real estate, this is not the case. You can't just buy a property today and then sell it tomorrow. A lot of the time, closures require money. They require lawyers. They require you paying realtor fees, and also take months to maybe find somebody, do all the paperwork, and then finally sell the property. This is kind of like a blessing and a curse if you think about it, because as investors, a lot of the time we do the wrong thing. Like, we sell when like things are going crazy and like we're panicking. When we should be buying, we're selling. When we should be selling, we're buying. Our emotions get the better of us, and then we start like just acting a fool with these numbers. And honestly, I'm guilty of that. Like, I'm not a professional, but like I consider myself knowledgeable, and sometimes I make that mistake too. Like last week, I was up like 7 to 8% in all my investments across the board on the Robinhood app, right? And I was literally sitting there like, don't touch me, like I'm Reg.
Now you're looking at the world's richest man, and I'm black. Kiss my black ass, America.
Well, I think what everyone wants to know now is, what are you going to do with all this money?
I'm going to reinvest my money into the community.
Oh, that's a very nice gesture. What were you saying? Okay. Is that your son?
No, I just bought this baby cash. No.
Like, I should sell this stuff and I should make money off of it, right? But I had to like remind myself of my investment strategy, like hold for the long term, don't sell anything, you're good. That being said, I'm definitely gonna give 1 point to real estate because it makes it harder for your emotions to get the better of you. There's also a steeper barrier to entry in real estate than there is in stocks. To be a stock investor, all you really need is to be 18 years old, have like $3 and download the Robinhood app, and then you could start buying fractional shares and boom, you're a stock market investor. In fact, about 55% of people in the United States are stock market investors because 55% of people have 401, yeah, okay, sure, get the hell out of here, and they are automatically now invested into the stock market for their retirement. But with real estate, it's a little bit more complicated. Depending on the type of real estate that you're gonna start investing in, you need anywhere between a 3.5 to a 20% down payment and at least a 640 credit score to not get like laughed out of the bank. Even though you could get away with like a 640 sometimes, I definitely recommend going in with a 750 or higher credit score. The reason I say this is because the interest rates that you'll get with a 750 credit score are significantly less than the interest rate you'll get with a 640 credit score. With a 640, you're probably gonna get somewhere around 6 to 7%. And with a 750, they'll probably give you something around 3.5, 4 maybe if you're pushing it. And over the course of, the 15 to 30 years that you do this, I could save you hundreds of thousands of dollars over your investment period. So that being said, I will give 1 point to stocks for having a lower barrier to entry. That brings me to another point. Real estate investing usually requires you going into debt, or they'll call it credit, right? But stocks really don't. Even though you technically can by using something called the stock margins, but like it's not a necessity. Alexa, shut up! In real estate, a lot of the time you're gonna use debt or credit to leverage your returns. And that can be a huge plus or it could be a huge minus depending on how you look at it. For example, this is what I was talking about in terms of leveraging credit for larger returns. So let's say that you have $100,000 right now. Do you wanna put that in stocks or do you wanna put that in real estate? So if you were to put it in stocks, then that would be $100,000. Can y'all see that? No, probably not, right? So 100K, right? Over the course of history, the market has been returning 8%, 8 to 10%. So let's go conservative and let's say 8% increase, right? So you would see an 8% increase on your $100,000, which means that you would see $108,000, right? That'd be the value of your account. You would see an 8K increase. You would see a return of $8,000 on your $100,000. Stocks. Now, what if you took that to real estate? In real estate, if you're classified as an investor, meaning that the property is not your primary residence, you're required to put 20% down. But if it's your primary residence, you can get away with putting, I don't know, like 3.5 and upwards of 20%, right? So let's just say that you're an investor. Let's say that you're gonna put the 20% down. So if you have 100K, you can buy a property for about $500,000, right? 1 in 5, 20%.
2 plus 2 is 4, minus 1, that's 3, quick maths.
So you buy a property for $500,000, right? With your 100K invested as the down payment for that property, right? You have a solid credit score, et cetera, et cetera. Now, if that property increases 8% the same way that your stock increased 8%, how much would you have? You would have $540,000, which means that you would have made $40,000 opposed to $8,000, still only investing 100K. So that's how you can use credit or leverage credit to increase your return. Both assets increased 8%, but this one you made 8K on, this one you made 40K on. And now you're probably gonna sit here and tell me like, Okay, Winnie, yeah, that makes sense, but like, why would I ever go into the stock market if I can make 5 times the amount of money in real estate? Well, you have to think about it like this. With this option, you're starting right at positive 100K, because you started at 0, then you put 100K into your investment account. You're starting at plus 100K. With this guy, you're starting at negative 400K. Why? Because you have debt of buying a property of 500K. You're putting 100K down on the property to secure a loan for 400K. So even though you're investing 100K into both ideas, both investments, one investment, you're starting off with plus 100K. The other investment, you're starting off with minus 400K. So you're definitely gonna have to work a lot harder to make this guy break even. But if you can like look at the numbers, if you're making 40K or 5 times the amount, it shouldn't take you that long to break even every time. So it's just something to keep your mind on. And yes, I got a whiteboard, what's it to you? So that being said, I'm gonna give 1 point to stocks for being able to start without going into debt. But I'm gonna also give 1 point to real estate for being able to use that credit, that debt to leverage your returns. Also, one of the major turn-ons for a lot of real estate investors is the fact that you can cash flow properties to generate like passive income every month. Anybody that talks about real estate like creams their pants whenever you talk to them about generating passive income, and like, yeah, cool. But a lot of the time people don't understand that passive income isn't always really passive, right? Like when it comes to real estate investing, it's not as passive as it sounds. You gotta get out there, you gotta find the property, you gotta bid on the property, sometimes you gotta fix up the property, right? All of this work goes into it in the beginning. It's not really passive, right? There's a concept called passive investing, and that is when you just put your money into the stock market over time, and then you'll let that money accumulate. So in terms of passive income, yes, real estate can generate a passive flow of income, but it's a lot of work in the beginning. For some people, like, this is the wave. Like, if that's you, bro, go for it. But like me,
it's definitely a no for me, dog.
Couldn't be me, dog. Like, look at these hands. Do these hands look like they need to be fixing up properties? Like, I need to be sitting in a penthouse somewhere typing on my keyboard looking at 4 screens. Like, I don't need to be fixing up a property. That's why I usually opt for more options like index fund investing, because it's truly passive. Like, it just mimics the market. There's no need to trade. There's no need to waste my time doing things that I don't want to do. So that being said, I am going to give 1 point to each of them, because it really depends what you like to do and your idea of passive. But now generating passive income is a different story, right? Real estate and stocks both generate passive income. It's just the amount and how they generate it is a little bit differently. When it comes to real estate, the idea is to cash flow on a property every single month, right? Like, y'all know how this goes. You buy a house, you fix it up, or you rent it out, and you make the rent a little bit more than the mortgage, so you're still making a profit every month after you paid all the stuff and all the people to manage it, etc., 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 right? That's that idea that everybody utilizes when it comes to real estate investing. Generate cash flow every single month. Stocks can also give you a form of residual income as well. It's called dividends. Not all stocks pay dividends, but most of them do, and most index funds do as well. And the idea of dividends it's essentially just the company owners distributing their profits to their shareholders, which would be you if you own the stock. And those usually come monthly, annually, quarterly, depending on the business as well. And that is a form of residual income as well. But I will say this, usually if done correctly, now this is if done correctly, cash flowing is more lucrative than dividends depending on how much you have invested. So I will give 1 point to real estate for being able to provide more residual income. Finally, real estate investors usually enjoy more tax benefits than stock investors. There's a concept called a tax deduction for depreciation, and that's actually when you get to write off the entire purchase price of the property over a certain amount of years, pretty much saying that the property is depreciating, so you get to claim that amount against your income. So you get a tax write-off for your property depreciating. You can't really do that for stocks. Even though you could write off some of your losses in the stock market as a capital loss write-off, for example, this is limited to like $3,000 a year. So a lot of the time, depreciation write-offs offer a lot more benefit than capital loss write-offs. So we're gonna have to give a +1 to real estate because there are a lot more tax benefits that come with real estate that I haven't even mentioned. So as you can see, the score is pretty much even right here. And at the end of the day, that's because it really depends on you, bro. Like, it depends on what you want to do, what your idea of investing is, what your strategy is, what your risk tolerance is. Remember, this is all personal at the end of the day. But if you're looking for something like in the middle, trying to join the two, I want to introduce you to the idea of real estate investment trusts. It's called REITs. No, REITs. Essentially what a REIT is it's just a company that buys and manages sometimes income producing properties like apartments, like commercial real estate properties, etc., etc. And REITs, they pay pretty decent dividends because all the money that they make is just from renters, right? So their money is not tied to like the market, for example. It's literally people like paying them that need places to live. So they tend to pay great dividends. And also they're required by law to pay, I think, 90% of their income back to their shareholders. So like, you know that you're gonna get paid. On top of that, you also get to offload a lot of that operational overhead towards all of these guys that's literally their job, just to buy these properties and manage them. You become at that point just an individual investor like into this company that is doing all the hard work for you, and then they're just paying you your money. It's actually just like stocks for real estate. It's one of the best ways to combine the stock market and the real estate market into one investment. So that being said, I know that both of these are great investments, both the stock market and the real estate market. I'm in both of them and I plan on staying in both of them for a very long time. So don't just limit yourself to one, and definitely look at all your options. If you have any questions about anything that I said, first things first, watch the video again, then like it, then comment, then share, and then DM me, and then we could talk about it. Other than that though, I just want to encourage you guys to continue to grow each and every day. Definitely like the video, comment, do all that stuff that YouTube people be saying to each other. I love y'all. Be blessed.